Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for December 14th, 2008. AccendoTraders.com, effective video trade plans delivered daily. Each afternoon, we come together to work on our trade plan for the next trading day. We go through the same routine where we want to see what type of news is coming down the pipeline to prepare ourselves so that we know what might affect our open positions. We also want to, on a weekend, take a look at some of the sectors and some of the blogs out there to get an idea of where the market may be heading. We always scan for new trades each night to, again, prepare ourselves for the next trading day, set alerts for new trades. Most importantly, we want to make sure that we have time to spend with our families. So this week certainly was interesting. You can basically see that the market ended up unchanged for the week. We certainly were range bound with the way we traded up and down, and we're sitting here hovering at the 50 moving average. But what's good about that is that it's possible that we're finally seeing somewhat of a sentiment change in the market because we had a week where the negative news continued to come out. It didn't crush the market like it had, back in November and October. The market was able to sustain as the negative news continued to come out. Now, we had the Tribune Company file for bankruptcy. We had some earnings warning from FedEx and Texas Instrument and New York. We had job cuts from Dow Chemical and Bank of America. Even the T-bill was negative for a time, which means that people were willing to pay the government to hold their money. We had J.P. Morgan on Friday, was giving some interviews about the state of the market and basically said November was horrible and December is not looking to be any better. But he also said something about where he was saying that we didn't ask for the money, the government told us to take it. And he said that lending will pick up. November retail numbers declined 1.8%, but that was actually better than expected. Then we had Friday where the former NASDAQ chairman was arrested on securities fraud, some hedge fund, and that certainly is going to be interesting. And then we had this whole auto bailout thing. It's on, it's off, it's off. Thursday evening, the Senate voted it down. The market started off real down, but then the government came out and said maybe we will use the TARP. And futures are up right now, so yeah, I think people are really assuming that the government will actually bail out the auto industry. This week, we have some interesting news, but the most important thing that we have this week is the FOMC policy statement on Tuesday. Now, we're at a point where we're not even sure rate cuts actually have effect on the market, but it is interesting to see what type of language that they provide for us. So we have the FOMC policy statement on Tuesday. With regards to tomorrow, you can see we have some economic news, not that much. Again, I think what's going to drive the market tomorrow will be any further details about whether or not the TARP will be used for the auto bailout. No big earnings tomorrow. However, we do have Goldman Day. We also have RIM this week. So we do have some big companies coming out this week that could impact the market. And we actually do have one split play, but I'm not sure if I'm really going to be watching that. So let's go ahead and move on to our next section. So I want to go ahead and spotlight a couple sectors. As we talked about, we want to see if we're going to break above the 50 moving average on several sectors. First one up, though, I want to look at is energy. Check out energy. Again, as we talked about last week, some quadruple bottoms. We did go up, touch the 50, and pull back a little bit. I want to see if we can continue to move up with energy. We also have the oil and gas refineries. Also made a nice move, but pull back. So we want to see this could be good entries. Again, the safe entry is above the 50. But the one that really caught my eyes, check out the metals sector. Now, this has been a sector that has been just beaten. I mean, look at that. But it really took off. Now, the 50 did hold up as resistance, but I'm really liking this one. So metals is one sector that I'm really watching. Alongside of that is steel and iron. Check out steel and iron. Not as strong. You can see not up here at the 50, so we've got some more room to run for that. And now check out gold. we have been waiting for gold to take leadership, to make a move, and you can see that we have a higher high here, higher low, higher high, higher low, and yet another higher high. So certainly above this 350 mark will be interesting. Going to be definitely looking at some gold plays. Last week we talked about insurance. Insurance is still looking like it has some interest in it. Again, 50 moving hours being since I want to play that if it gets above. Manufacturing. Manufacturing is what has our new president been talking. A real big stimulus bill, infrastructure rules. That should be. So I'm going to watch and see what they can do. You can see that it's making some higher highs and lows running up to the 50. So I want to see what the stimulus package may do for manufacturing. The other sector we're looking at is retail. We've been looking at this, and we talked about Ralph Lauren last week. You can see the 50 moving average is really holding up its resistance, but you want to see if that can break above there. Now, on the anti-oil play, meaning oil being low, has really been affecting railroads. Look how they've taken a crush. Now, we've had some strong support here, but we possibly may move below this. So if we can get below these wicks here, railroad can actually go lower. And finally, internet, also running up here to the 50 moving. So those are just some of the sectors that I'm going to be looking at this week. A little, but it can wreak havoc to your whole program. To be a successful trader, you have to find that flawed line of code in your middle system and replace it with something that works properly, a trade plan. And many will call that the aha moment when you finally feel like, oh man, it was just a quotation mark, or forget about if it's an error in the code, how do you solve the problem? And then finally, we've all had that moment where like, oh, that's how to do it. Well, trading is like that also. A lot of people have this aha moment that, it really is a simple thing. Doesn't mean that it's easy. Doesn't mean that you're always going to win. But to be a successful trader is actually really simple. Have a trade plan, control your emotions, stick to your plan. Build a plan, trade the plan. It's really simple. But for people to come to that awareness can be an aha moment, and more importantly, it takes some people, sometimes they never figure it out. But I know for me, I said like what most people say when you have this aha moment. It's like, man, it was in front of me all the time. It was simple. I even had people tell me you have to have a trade plan, and I was so focused on trying to make money that that trade plan is nice, but I want to make money. Tell me how to make money. Well, JJ, she said, we'll make a trade plan. I get that, but tell me how to make money. And people don't understand that the way you make money is through a trade plan. The way you make money is by having systems in place so that you can repeat it. Anybody can get lucky, but to be lucky all the time, it can't happen. Now, I was reading on a forum yesterday, someone said, well, the 100% guaranteed trading plan is to take a new trader and trade opposite of them. And I said, well, first of all, by saying 100% guaranteed, you're showing me that you've got some problems anyway, because everybody knows nothing's guaranteed, especially 100% in the stock market. And the second part is that even new traders, inexperienced traders, get lucky, so it's not going to be 100% either. So you just have to take the time to develop your system and then trade that system and make adjustments when necessary. In short, Mark goes on to say that you may already have what you need to be a consistent trader. Many of you know a lot about technical indicators. Many of you know about price action. I just put a good post on my blog about price action, and I'm getting ready to post another post on volume. So a lot of you already have the components of a system. You haven't put them together to make it into a clockwork system. So being aware of technical indicators is not enough to be a successful trader. We've said often in the past that market knowledge and technical analysis is not what's going to make you a successful trader. But developing the right mindset and having a system, a trade plan will. You have the components. You just haven't taken the time to put them together. And again, I'll go back to when I was starting out, I knew about technical indicators, and the person told me to make a trade plan, but I was so focused on, well, how do I make money? How do I use this indicator? How do I use that indicator? And it came down to that I needed to put these things all together to be successful. So That's it for this week, unless you guys would go ahead and take the time to download our podcast. It has the we have really we do. Also, you can see, there it is, AccendoTraders.com, subscribe to the podcast. Also, if you want to become a paid member where you get our daily picks on what to trade for the next day, there's our link for that, AccendoTraders.com, video.html. Check out our blog. I just said that I put some new posts on there. I know there is one glitch about all the old links not showing up, but we're working on that. And finally, the 30-day challenge with all the videos are still there on how to trade. Check out the 30-day challenge forum. Thanks, guys, and I will see you next time.